We have massive news because the Fed has finally cut rates. We've been talking about it on this channel for months about how we need a rate cut, and it has finally come. And the reason I'm making this video is because it will affect every single person that has any kind of debt, or if you just have cash or investments sitting around. It's going to affect your mortgages. It's going to affect credit cards. It's going to affect personal loans, auto loans. It's going to affect your investments and even money sitting in a savings account. And the reason that it's going to affect all these things is why I am making this video. So stick around, hit that subscribe button for future content like this, and let's jump into the video. So the first thing, if you are looking to buy a house, or if you already have a house that you've bought in the last couple years at 6, 7, 8% interest rates, this is something to start paying attention to, because the Fed has also hinted at more rate cuts here this year. They're thinking probably 2 more in the year of 2025, and then even more in 2026. So if you have a high rate on your mortgage, then it might be time to start looking at it and say, hey, if it gets down to the 5s, maybe we consider refinancing our home, because refinancing a home at even a 1% rate drop means you're basically getting a raise without having to change jobs, because you could save hundreds of dollars per month. Hundreds of dollars per month in your mortgage payment could get cut just by refinancing. Now, make sure you talk to your bank. Make sure you talk to your lender, because they can actually go into that to see if refinances is actually worth it in your current circumstance on where you bought your house. Now, if you're looking for a house, if you're wanting to buy a house, this is also good because mortgage rates are the lowest they have been in 2 years. Yes, 2 years. And as rates go down, usually the values of houses go up because people start buying more houses. They get into the market because now they're saying, hey, the rates are going down. Well, if the rates go down, more people get into the market. Basic supply and demand goes up, house prices will rise. So it hasn't been a big, massive mortgage rate cut that we're seeing. It's around 6.25 right now, but that is a lot better than over 7 and even 7.5 that people were getting over the last 2 years. So if you have anything to do with mortgages, anything to do with houses, this is massive, and we need to be paying attention, because now that the Fed has cut once, and they're already hinting at multiple other cuts, rates could definitely keep coming down. So if you're going to buy a house, maybe start looking into it. And if you're going to refinance a house, definitely keep watching. Credit cards and debt are also going to go down. What does that mean? Because as it costs more to borrow money, that means as rates get lower, it costs less to borrow money. So actually, credit cards will have lower APRs. Guess what? I don't care what an APR is on a credit card, because I'm never going to hit with interest, because I'm a credit card person. So if you're not a credit card person, then maybe you need to get out of the high interest debt anyways and really pay attention to that. I'm talking about other types of debt that are going to go down. So student loan type debt, that is going to go down. Private loans are going to be able to go down, meaning that you can invest money into a business, invest money into your education, invest money into all different types of debt, good debt, where rates are going to be lower. So that is one thing to also watch. The second thing about this is also like personal loans, auto loans, all that's also going to get down. So if you've been thinking about buying a car and you have to finance it, it's actually a better time to buy now when rates are going down compared to up, because interest sucks. That's just it. Interest sucks. So yeah, start paying that high interest debt down now. You should have already been doing that, but especially now, because if you do have to take out debt in the future for whatever reason, whatever circumstance, it will be cheaper here in the near future. It already is starting to be cheaper. It'll get even cheaper as the Fed cuts more. My favorite thing and the reason that I was wanting the Fed to cut is because I am an investor. I am an investor, and I like to have money in the stock market. I have 401k, Roth IRA. I have individual stocks. My wife, same thing, has everything. 401k, Roth, individual stocks, crypto, everything. You name it, we like to invest. Well, just like I said before, as rates get cut, companies will actually borrow money, and it's cheaper. it's cheaper for them to borrow money, meaning they can take out more debt, they can hire more people, they can expand their business, they can do all kinds of stuff with less money because it's cheaper without having to get hit with interest. And so when this happens, really, companies start taking off. They start growing. They start expanding. Their workforce gets bigger. And what that does is they start making more money. They start making more revenue. They start growing, meaning stock prices will start going up. So hence, if you're in the stock market or if you're not in the stock market and you want to get in, it's actually a really good time, even though the markets are at all-time highs. They're pumping. If you just keep consistently buying in, dollar cost averaging, eventually it'll just keep going up because companies will start growing and growing and growing. Now, that is my personal opinion. That's not financial advice. Make sure you do your own research, but that's why it is huge for the stocks and investments, because as companies grow, they'll be able to borrow more for cheaper, meaning they're growing faster and faster and faster, like a snowball, and their stocks can keep going up, up, and up, especially when people are seeing their financial reporting, seeing how fast they are growing. People get excited, stocks go up, and then people just get FOMO. They buy more, and it's just a rolling snowball going down a hill. And this is the same thing for crypto. As rates get down, people will start taking out some crazy leverage trades where they're doing 20, 100x type leverage, which is absolutely insane. But it's good for me that I don't do a lot of leverage, and so I just keep buying. And then as they're doing the leverage and they get shorted or something, and my stuff might go up, and I benefit from that. So make sure you do your own research, but stocks and investments are huge when it comes to actually cutting rates. And then the last one that I want to talk about is your savings account. If you have cash sitting on the side in a savings account and you don't have it in a high interest savings account, well, now banks are going to start lowering those high interest savings account, because as the rate gets lower, they're not going to pay you as much to have the money in the bank, because it doesn't make sense for them to pay more than what they would be getting anyways, if that makes sense. So you're going to want to move that money into a high interest savings account, lock in a high interest savings account rate, and then if you don't want it in the high interest savings account because some banks just aren't going to offer that anymore, they're going to have a lower interest rate, then maybe move that over to actual investing, into actual stocks, into actual 401k, Roth IRA, retirement type accounts where you are getting a bigger return on your money. Because the last couple of years, we've been seeing 4 or 5% high interest savings account, which is absolutely insane. You put $100 in, you get $5 every single year. That is absolutely insane. We don't see that very often in today's markets, but we do here. And so it is awesome because we've been able to just put money in and it just grows passively without having any risk, basically. But now that the rates are going to drop, those high interest savings account, those interest rates that you're actually getting from the bank are going to be a lot lower, especially if we keep getting more and more rates from the Fed. So you're going to want to look into that too. Make sure you're tracking your APRs so that you know how much, or your APY, so that you know how much you can actually get from your bank, and if it's smarter to move that money, or maybe even move banks that still has a higher APY every single year. So that's the bottom line. Get out of your high interest debt that you have and really just take action. Refinance a high interest debt if you have it. If you have crazy credit cards, if you have a crazy mortgage, if you have crazy student or personal loans, refinance those to a lower debt if possible, if you know you can still make those payments. And then just kill all high interest debts, pay them off as fast as possible, and then position yourself for your investments. Make sure you're taking advantage of your investments before stocks take off, before all these different things that are going into the stock market, into cryptos, into these investment type accounts. Make sure you're positioning yourself well so that you do catch the highs when they do start going up because the rates are going down. So make sure you're in the market, make sure you're actually invested, and you have a little piece of the pie that's sitting there, because you're going to really feel FOMO and you're really going to feel like you missed out if you are like, I'm holding on the side, I'm waiting. And all of a sudden the market goes up and then you're like, I need to get in now. And you get in now, but it might be already 10, 15, 20% higher than what you would have bought in if you just bought in now. So that's all my personal opinion. That's not financial advice, but just do your own research. Get rid of your debt, your high interest debt, refinance to smart investments, smart debt, refinance into smart debt, and then make sure your investments are positioned so that you can benefit from the markets going up as the rates go down. If you like knowledge like this, where you're staying up to date on what the markets are doing, what the Fed is doing, what some things that you could actually benefit from moving and making the right decisions, then hit that subscribe button down below and comment down below. What are you doing since the rates are going down? Are you investing more in the markets? Are you refinancing? Are you going out and knocking out all your high interest debt by paying it off as fast as possible? What are you doing to set yourself up to benefit from rates going down? I want to know down in the comment section. Hit that like, hit that subscribe, and remember guys, until next time, you can do all things through him that give you strength. Peace.